Welcome to Alpha Recap. Today we're unpacking a post-market roundup that was all about chips, electrification, and a string of small but important corporate moves. As always, if you have questions, you can reach us at stockalpha.ai. I'm joined by Kate, our fixed income specialist. Great to have you on.
Thanks for having me. Plenty to talk about from today's session. It was a concentrated tape with a few names doing the heavy lifting and a lot of smaller strategic updates that matter over the medium term.
Let's start with the big market movers. Nvidia traded heavily and finished the day up modestly. It closed at $190 on volume of about 143 million shares. Ford outperformed the autos group, finishing up about 1.7% at about $13.80, with roughly 127 million shares changing hands. And Wedbush raised its price target on GlobalFoundries to $50 from $40, which is about a 25% bump. Those three headlines really set the tone for the session.
They did. Nvidia remains the proxy for AI hardware demand, and seeing that kind of volume with a modest uptick kept it in focus as a market barometer. Ford's activity showed autos were getting repriced on news and flow, and the GlobalFoundries upgrade is a reminder that analysts are getting more constructive on foundry demand. From a fixed income angle, that kind of concentrated equity action often parallels a re-risking in credit markets, people chasing growth where they expect durable revenue streams.
When you say re-risking in credit, can you explain that in plain English?
Sure. Re-risking simply means investors are willing to take on more credit risk, buying high-yield or lower-rated bonds, because they expect cash flows to improve. If analysts are raising targets for chip makers and foundries, investors may assume capital spending will lead to higher sales, which reduces the likelihood of default and supports tighter credit spreads. It's the equity optimism filtering into bond markets.
Let's dig into the first theme: semiconductors and AI. Nvidia's volume-backed move and the upgrade at GlobalFoundries were highlighted as two sides of the same trend. Why does a foundry target raise matter as much as the GPU leader staying strong?
Because AI demand cascades. Nvidia sells accelerators, but those accelerators need silicon, power management, memory, and packaging. Foundries are the factories that actually make chips. When an analyst like Wedbush raises a target on a foundry, it signals expectations for stronger capacity demand or better margins. That broadens the bull case beyond the fabless designers to the whole supply chain. Memory makers, analog suppliers, even substrate and packaging players. For bondholders, better foundry economics can translate into steadier cash flows and improved covenant coverage down the road.
You mentioned follow-through catalysts, earnings, product launches, enterprise AI deployments. From the market action we saw today, what would you be watching next to confirm this is more than short-term enthusiasm?
Two simple things. First, follow through volume on the leaders. For Nvidia, support and resistance around $190, and whether days with heavy volume push the stock consistently higher. Second, concrete commercial signs from companies lower in the chain. Supply agreements, capital spend guidance from chip makers or foundries, and analyst succession notes. If we start to see customers disclosed or multi-year capacity commitments, that's when optimism becomes durable.
Moving to electrification. The notes flagged that electrification is spreading beyond cars. Vision Marine filed a patent around high-voltage electric outboard systems and is integrating a retail network called Nautical Ventures. Ford's active session also fed that theme. How should investors interpret these kinds of patent and retail moves from small caps?
Patents and retail integration are classic early-stage commercialization steps. The patent protects an idea. In this case, how to structurally integrate high-voltage systems into marine outboards, and the retail integration gives a distribution channel to sell the product. Individually, they're small, but collectively they show the company is moving from prototype to market. For investors, the key is whether these steps lead to actual orders, revenue, and scale. From a fixed income perspective, small caps with patents still face execution risk, so credit investors will want to see milestone-based financing or clear revenue paths before getting comfortable.
You used the phrase addressable market earlier. How does a patent in marine outboards affect the semiconductor suppliers we were talking about?
It increases addressable demand. Electrifying an outboard motor requires power electronics, battery management, sensors, and connectivity, all of which use semiconductors. So as electrification spreads into boats, commercial vehicles, or aftermarket channels, chip makers gain more end markets to sell into. That's why we see linkages between the Nvidia foundry story and the small-cap electrification announcements.
Theme 3 was cybersecurity and enterprise tech, mainly leadership hires like a new chief technology officer at a threat detection company and a new chief operating officer at a blockchain-focused business. What did those moves imply?
Hiring senior technical and operating leaders is a sign a company is shifting from product development to scaling sales and commercial execution. For cybersecurity firms, a CTO hire focused on perimeter detection and scaled threat intelligence suggests they're preparing for enterprise deployments. That can lead to partnership announcements or pilot programs with larger public companies. For investors, these hires are early signals, not revenue yet, but indicators to watch for product releases, customer wins, and potentially improved revenue visibility.
And does that matter to bond markets as well?
It can. If those hires lead to meaningful revenue growth, they improve operating cash flow and the company's ability to service debt. That reduces credit risk. But it's a timeline game. Hires can precede revenue by quarters, so credit investors will want to see execution milestones, not just the resume.
Theme 4 covered policy-driven adoption and industry pilots, China's rural AI and IoT pilots for agriculture, and a virtual reality crane simulator being recognized at a major construction show. How should listeners think about policy and awards like this?
Policy can create predictable demand. When local governments fund pilots or rollouts, like AI and IoT for specialty agriculture, that can generate real commercial opportunities for sensors, connectivity, and precision software. Similarly, industry validation like a VR simulator making a finalist list at a big construction event signals that buyers are taking notice. These are examples of demand creation that isn't purely market-driven. It's government or industry platform-driven, which often means larger procurement cycles and potential multi-year contracts if pilots are successful.
Theme 5 was corporate governance and small-cap moves. A new CEO at an innovative sterilization company, the patent steps we mentioned, and an event called LeapCon in late February featuring executives from big names. Why did you flag governance changes and events as worth watching?
Leadership changes can precede strategic shifts. New CEOs often bring different priorities, capital plans, or go-to-market strategies. Events like LeapCon or trade shows can be catalysts for announcements, partnerships, or pilot news. For small caps, that combination, governance change plus upcoming industry exposure, can set the stage for partnerships, financings, or even acquisition interest if products start to resonate.
Let's pull this together. The briefing emphasized a few patterns: concentration of activity in AI and semiconductors, diversification of electrification, commercialization-driven hires, and policy or event-driven demand. From a risk and portfolio perspective, what should investors prioritize?
Prioritize follow-through volume and concrete milestones. Volume confirms conviction. Heavy days followed by heavy days are more meaningful than a single spike. Milestones mean orders, supply agreements, capital spend guidance, or disclosed customer wins. For fixed income holders, look at covenant strength, cash runway, and whether small caps have milestone-linked financing. For equity investors, watch whether the optimism broadens from leaders into suppliers and suppliers into capital goods and services.
Okay, practical checklist. What are the immediate things to watch when markets open again?
First, Nvidia around $190 and whether volume keeps up on follow-through days. Second, market reaction and volume in GlobalFoundries after the Wedbush upgrade. Are peers getting re-rated too? Third, Ford's trading consistency above about $13.80. Sustained volume would suggest conviction. Fourth, any patent office updates for Vision Marine and progress on Nautical Ventures integration. Fifth, watch for press releases from the cybersecurity and small cap companies that could convert hires and governance changes into revenue signals. And finally, look for announcements coming out of Con Expo, Con AG, and LeapCon after those events.
Before we wrap, a quick note on the tone of today's market. It felt concentrated rather than broad-based. Would you agree?
Yes. Concentration means volatility and sentiment can be driven by a handful of names. That's why tracking follow-through and real commercial milestones matters more than headlines alone. When leaders move, you want to see the ripple effects across suppliers and customers to be confident the theme is sustainable.
All right, let's finish with 3 clear takeaways for our listeners.
1. AI demand still dominated the tape, and today's volume-backed Nvidia move plus a bullish foundry upgrade pointed to a broader supply chain re-rating. 2. Electrification is spreading into new transport verticals, so small patents and retail moves can be the first sign of much larger addressable markets. 3. Executive hires, awards, and policy pilots are leading indicators. They don't equal revenue yet, but they're the early groundwork for commercialization and partnerships.
Great summary. That wraps up today's recap. If you have questions about anything we covered, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening, and we'll see you next market close.